Welcome to February 2020's edition of M4, the Metro Milwaukee Market Minute. And folks, February sales, we're up 7.4% in the 5-county area. Starting off with Milwaukee County, not a huge increase, but good to see an increase over last year. We were up in Milwaukee County 2.6%. Waukesha County 8.2%. Washington County up astonishing, almost 24%. And Ozaukee County leading the league up 35.8%. Racine got hammered. For some reason, sales were not good in Racine. I think it had a lot to do with real low inventory there, which we'll look at in a bit, but they were down 16%. What does this mean? It means February was up, but I don't want you to think too highly of it, because last year in February, we had really crappy weather. And this February was not too bad. So I think that had something to do with it, but everything is going to be derivative on listings. Now, obviously, we're dealing with COVID-19. I expect things to definitely slow up, especially coming into quarter two. We're going to see some delays in closings, I think, with just everybody freaking out a bit. And by the time you see this, it'll be about a week from now, so we'll know more then. But I do believe over the foreseeable next couple of weeks anyway, we're going to see a pullback, definitely in listings, new listings coming to the market, and just buyers freaking out a little bit over the flu. But when I look at what we've got going on, it's good, but it isn't great. I think we need inventory. We were down in inventory last month in January, and we did get a good uptick this February. Listing inventory, we were up 22%, but again, a lot of that is because last February was so low due to bad weather. But Milwaukee up 22% is a good start. Waukesha up 25%, Washington County 36%, Ozaukee County up 20%, and Racine finally kicked into gear, so I expect Racine sales to be up coming in this next month, because they were up almost 30% in new listings in the month of February. We're still sitting at low inventory, especially for first-time buyers, but here's what's happening. The first-time buyers are buying. They're the number one purchaser of homes right now. Almost 40% of these properties are under 300 grand and going to first-time buyers, but we're also seeing an uptick from seniors or people, empty nesters, downsizing. So we're seeing those folks put their little bit higher priced homes on the market and get into something a little bit more affordable and smaller. So those are the inventories that we need the most action in, is that smaller, lower priced property. When I look at the market as a whole, the houses sitting at about 450,000 and above are struggling a little bit more. You really have to have the right stuff to get someone to pull the trigger, but interest rates are tremendous. Now, I want to make sure everybody understands what's been echoed on social media. The Feds cut the rate to near zero. This does not have anything to do with mortgage rates. This is very short-term money. This is what banks borrow at to each other. This is not going to affect a 30-year mortgage. Now, there is some cause and effect, obviously, and it's going to be on supply and demand. Right now, we had an $11 trillion injection of desirable or desired money to be refinanced. The market usually in a year gets $2 to $3 trillion. So that massive refi boom has caused the interest rates to actually go up, because what the banks are doing is they're repelling refinances. Now, you can get a really good low interest rate on a purchase, but they're trying to push off the refi market by raising the rates, because they don't have enough cash to do that. Now, there's a ton of stimulus that's being announced this week. I think that's going to have a great positive impact on not just the stock market, but to try to get people over this panic of the flu pandemic. And I think we're going to be in really good shape once the dust settles. I don't expect the stock market to be back to 29,000, because I think it was a little bit overinflated. We did need a little bit of a haircut. But overall, if we keep interest rates low, if we can avoid long-term layoffs, as long as this is just a temporary hiccup, the next 3 to 6 weeks, I think we're going to come back real strong towards the end of the second quarter in home sales, and build from there all the way through the end of the year, driven by low interest rates and hoping people put their houses on the market. But we still need inventory. Folks, do not let this pandemic freak you out. We're still seeing multiple offers on the right properties that are priced right in those hot zone price ranges, I guess you could say. But stay tuned. This was M4 for the month of February. signing off. See ya.